Hey there, traders, and welcome back for episode 62 from the StockBandit.tv. I'm always glad that you're able to make it, and I hope it's been a great weekend for you. By the way, if you are a mother, happy Mother's Day. There are no one else in the world who has as much influence as you or as much importance. So congratulations if you're a mother, and happy Mother's Day. So let's take a look at the major averages and get a good look at the big picture before we head into a brand new week of trading. I hope you're as excited as I am about that opening bell ringing on Monday. That's always the sound of opportunity. And in front of that opening bell, we've got to be prepared as traders, because if we don't show up prepared, someone else will, and we're going to end up paying them for it, and I don't want to do that. So let's take a look at the indices here. We're going to start off with a look at the NASDAQ, which has just posted its 9th consecutive, this is 9 up weeks in a row off that March low. So it's a very impressive run here. At the same time, it has now approached a very important zone up here at 1785. We saw this index get close to that level last week, but it backed off a little bit, and showing a little bit of hesitation there. Now, along the way, during this uptrend over the past 9 weeks, this index has led the way among the big three. That is the NASDAQ, S&P, and Dow. So the NASDAQ has been leading the way, but last week it was only up about 20 points. So very unimpressive after making such a big move. So it's, again, showing some hesitation here beneath this key level at 1785, and I think that's worth noting. So if I zoom in here on the chart a little bit, and by the way, be sure you're watching this on the full screen mode. That's how you get the best resolution. If this index does happen to pull back from here, I would expect this 1665 area to be the level that's tested or possible support. That is former resistance, and so it may serve as possible support if we do see a little bit of profit taking kick in. And by the way, we will at some point. Whether that's this week or another week remains to be seen, but it's not going to be up and away forever. Got to keep that in mind as well. So moving back to the S&P 500, I want to show you here, this index cleared this 915, 918 level. It's been very important in the past. We actually were able to clear that last week. Now this index is up 8 of the last 9 weeks. So a very impressive run here as well off that March low, but has yet to clear the January high. And I think that's going to be very important. That's at 943. So even though it's through this 915 area, especially on a closing basis, 943 still is very important, as that would mark a new high for the year for the S&P 500. So let's see if that level is met. Then how does it respond? How does it get treated? For the S&P though, this 875 zone was former resistance. We saw it pose resistance in late January, early February, and then more recently a couple weeks ago. If we do see some profit taking, I would expect that level to be kind of an important zone once again. Former resistance may then become support. So let's keep an eye on that as well. And for the Dow, 8350 is right here at this level. It was former support and then resistance. It was cleared last week, and then it was tested on Thursday. Saw a little bit of a pullback to kind of test that area, and then we saw a bounce from that area on Friday. So that is, once again, this index respecting that 8350 zone. Now it is free to climb back up here to the 8950 zone on the upside, but if we do dip a little bit, I would expect 8350 to be a possible support zone. But that's kind of where we are for the Dow, kind of caught in between this level and that one right there, and of course anything goes in between. But the bulls still are in the driver's seat. They've produced quite a run off those March lows. They don't act like they're ready to quit just yet, but at some point the profit taking is going to begin. We're going to see the music end, and everybody's going to rush for a chair, and we could get a decent pullback once that happens. But again, I think the real key is going to be if that pullback is met with more buying and new highs. That's what's going to be the major key. Obviously, we've got a low in place in March across all the major averages. But if we do pull back and establish a higher low, then of course that's technically going to be very good. So that's what the bulls have in mind in case some selling does happen to kick in eventually. All right, so thanks again for joining me for this episode. I will be back soon with more videos, but in the meantime, trade like a bandit.